Hello friends, today I want to make a bold claim, scratch that fact, that women are better investors than men. And through the making of this video I have in fact realized that I am a man. Yo, what is up you guys? It's your boy Kyle here with Beast Finance, ready to take your goals and elevate them to the next level. Let's get it. So apparently there are quite a lot of articles written about the difference in investing between men and women, which I think is pretty fascinating, so I'm going to read some of them today. I'm going to start with an article from the Financial Times that simply states, do women really make better investors than men? Although fewer females are in the stock markets, numerous studies suggest they outperform on returns. And they do go a little bit into the statistics and the research behind this, so I think that's a good article to give us a base for evidence. Warwick Business School conducted a study of 2,800 UK men and women investing with Barclays Smart Investor, tracking their performance over 3 years. Not only did the women that were examined outperformed the FTSE 100 over the time period, they also achieved better returns than their male counterparts. And to go a little bit into the figures in these studies, it says the men in Warwick's study managed to an average annual return of 0.14% higher than the FTSE 100, but women outperformed the benchmark by 1.94%, beating men by 1.8 percentage points. A separate study by Hargreaves Lansdowne, the UK's biggest consumer investment platform, also found that women investors had the edge, returning on average 0.81% more than men over a 3-year period. Hargreaves points out, if this pattern were to continue for 30 years, the average woman would end up with a portfolio worth 25% more than the average man. And the article also mentions that 55% of women never held an investment compared to 37% of men. I just think it's really lovely to know that we do have what it takes, and for us to read articles like this and watch other girls talking about how they invest, because it really makes us realize that we do have what it takes, and it's not as difficult as it seems, because I do see that in a lot of my girlfriends and in myself as well when I first started investing, that it was really scary and it seemed very, very dangerous and very risky, and I don't know if I'm smart enough to do this. And that's something that I say a lot, and I think that's something that girls tend to say a lot, that we're not smart enough to do something. And in this case it actually sadly kind of helps us, because we do need to have that risk awareness. Yo, Kyle here once again, interfering a little bit just to build up on what Vivi just said now about saying she's stupid and all her little self-deprecating jokes. And I know that that's a big insecurity for her, right? But like, babes, don't do that. It's not worth your mental energy. You know what I mean? But even, like posting these videos, there's plenty of, I call them like little Easter eggs. She calls them massive catastrophes. But, like mispronouncing a word here and there, or like missing a word when she's reading, like, so what? Like, those things happen. We're nervous. This is not something that people usually do. It's normal to be nervous in front of a camera. Progress over perfection is what I'm saying. So just do it, babes. Just post that video, start that business, apply for that job. You've already got that risk cautiousness that people are telling you about, so why not take it next level? The first point the Financial Times makes is that women are more risk cautious. Women investors tend to be less likely to make risky financial decisions than men. The global BlackRock investor poll survey shows that 72% of women rejected investments in riskier equities, bonds or real estate, as opposed to 59% of men. And I do actually think that all this advice is helpful for both women and men, because we should all be risk conscious and aware of our risk levels before we start investing. And that being said, I do also need to learn to invest a little bit more like a lady. Another point the article makes is that women favor funds, and that's well known that it's a more diversified, secure and stable investment. The study revealed that men are more likely to take a risk on more speculative lottery style stocks, where they believe have the potential to make a lot of money very quickly. Men also tend to hold on loss-making investments in the hope they will come good. By contrast, slow and steady wins the race sums up the investment approach of many women. The Warwick study found women were more likely to invest in funds with a consistent record rather than opt for the volatility of individual stocks. I do try to keep like 50% of my investments in funds, but I do go for individual funds a lot because they are more fun and quick win. Hey. Like, you guys know me, I'm an honest guy. I say it how it is, what can I do? We've all been there scrolling through Reddit, watching all these people making massive gains from day trading. And I'll be honest, like, I will try it. I'll try it for a day just to see how it is, like for a laugh, see how it goes. And if I make some money from it, like, that's brilliant. Otherwise, it's just a little bit of fun, bro. What's the harm in having a little bit of fun? Final point is that women trade less frequently. The Hargreaves-Lansdowne study found that women traded shares 49% less frequently than men and traded funds 67% less. This point seems to be made more around the transaction costs. So men rack up high transaction costs because they trade out so frequently. But I guess this was also made by Hargreaves-Lansdowne, which has really high charges. So I don't exactly know how this study will go if it was made on a free trading platform. But I know there are some taxes as well on the free platforms for stamp duties and stuff like that, but it's not that as high, so I don't really know how the study will reflect if it was made on a free trading platform and not on Hargreaves-Lansdowne. And then there's this article on Guardian that says the truth about investing. Women do it better than men. And we've got our friend Patrick here that says, men are too emotional, they don't focus, they buy on trend and they're just too risky. Alright Patrick, you're looking at the face of a savage here. Classy, bougie, nasty. Patrick, what you doing? I'm not gonna go too deep into this article because it's quoting the same research as the previous one, Hargreaves-Lansdowne and the Warwick study, but with some spicy comments from Patrick calling men sensitive and emotional. So I'll just leave that in the description if you want Patrick's opinion on this. I think he's quite a funny guy. He also closes the article by saying, but I could be wrong. After all, I am a man, which I am worried about you, Patrick. If you book a therapy session, please take me with you. I need to speak about that as well. I feel like I should give a little bit of a disclaimer there because not all men. Like, there's plenty of YouTubers that I've learned a lot about ever since I went on this journey. Guys that know so much and they are risk aware and they know how to read the numbers and the figures and do a proper job in this world. So I'm definitely not saying that, oh yeah, all the guys are reckless and making all these risky investments. That's absolutely not true. There's plenty of guys on YouTube to prove this point, and what I'm actually trying to say is that they're more of a woman than I am. That's just a little bit banter there, guys. Don't come at me. I still respect all of yous. I am actually trying to become more of a woman myself and also a little bit more of a man myself, so it's just like I'm a little bit confused. But let's see how it goes. And then there's the final article, an article that made me find someone who I'm now in love with, obsessed. And it's an article for Forbes that says why women are better at investing. One of the world's most successful investors is probably a person you've never heard of. In fact, she doesn't even have a Wikipedia page. She does have it now. It wasn't me, but I checked it. For Geraldine Weiss, that's probably just fine. She spent decades of her life in disguise anyway. Geraldine started a financial advice newsletter in 1960s under the name G. Weiss, so readers wouldn't know she was a woman. Concealing her gender was important to be taken seriously back then. Miss Weiss had a degree from University of California, Berkeley. She demonstrated a strong work ethic, yet no brokerage firm would ever consider her for positions other than secretary. Regarding the banking and investment world, Miss Weiss once remarked, "It was a man's world and women need not apply." And I have been stalking Geraldine Weiss for the past couple of days and I'm obsessed with her. And I am gonna read a little bit more about Geraldine because I think she's absolutely brilliant, and it's shocking that I've never heard about her, and I don't know how many people have heard about her being one of the best investors of all time, and her returns are said to be better of those of Warren Buffett, to be honest, and she doesn't even appear if you search for best investors of all time. In fact, if you search for best investors of all time, you find all these guys that look just like me. I said it before and I'll say it again, there's no difference between us except the account balance and our maybe gender, but otherwise there's no difference. I found the article I was looking for, her comparison with Warren Buffett, and it's from The Telegraph saying how to invest like Geraldine Weiss, the queen of blue chip dividends. And in her newsletter she was publishing this list of lucky 13 companies that were supposed to be the best at the time to invest in. Her approach is used to identify the stock picks published by the investment newsletter Investment Quality Trends, which she founded in 1966. The newsletter has published a list of 13 recommended stocks called the Lucky 13 every January since 2000, and the portfolio of stock grew at an annualized rate of 11.5% between then and December last year, 17. So 11.8%, that's brilliant. And it just compares over the same period. The S&P 500 America's principal stock market index gained 4.5% a year, while Mr. Buffett's produced annual returns of 9.7%. And the article does go more in depth into her strategy, and there's a lot of articles out there about her strategy, but to be honest, like, I don't really understand most of them because it's too complicated for my tiny brain. But I really want to understand it, and I think I'm gonna spend a few hours and try to buy a few, well, not try to buy, try to see if I would buy a few stocks if I follow her strategy and her principles. That's gonna take me a while, but if I do understand it, I'm gonna definitely make a video about it, because I just think she deserves more recognition. I wonder if there are more videos about her on YouTube. I'm not a great YouTuber, I should have done my research, but now I do wish there were more videos about her, so I'll just check. Yeah, there's not a lot of videos out there about her. There's only one video about her investment strategy, and that's 1 minute and 20 seconds long. So it does make me feel a bit like, I don't know, maybe nowadays it's not as relevant, pick stocks based on dividends, but I still want to understand more about it, and I think it should be spoken more about it. I don't know if this video was helpful in any way, or if I made justice at all to all these brilliant women investing and Geraldine Weiss and amazing people who I feel like they should be represented by someone with some competence. I'm gonna link every article I've read in the description, and thank you very much for watching, and have a nice weekend. See you next weekend. Bye bye.